Hello everyone. We have learned to prepare different types of cash books so far. There are so many other books which are helpful in accounting. These books are called subsidiary books. In this video, we are going to discuss other subsidiary books used for recording transactions in accounting process. Let's start with the introduction. It is practically impossible to write all transactions in one journal for business having a large number of transactions. But it is possible to maintain separate books for those transactions which repeat many times a day, like sales, purchase, sales return, cash received, cash paid, etc. All these transactions are recorded in separate books called subsidiary books. These books are maintained because of some limitations of journal. Some of the limitations are: firstly, it is nearly impossible to get periodical details of some transactions from journal only. Internal check system cannot be installed. And lastly, journal becomes bulky. Now, what are the various types of subsidiary books? Subsidiary books are classified into four categories, that is, day books, cash book, bill books, and journal. Day books are further divided into four subcategories, that is, purchase book, purchase return book, sales return book. We have already discussed about cash book, and bill books are further subdivided into two categories, that is, bills receivable book, bills payable book. Now, let's start with the purpose of making subsidiary book. Purchases book record only credit purchases of goods by the trader. Sales book is meant for entering only credit sales of goods by the trader. Purchases return book records the goods returned by the trader to the suppliers. Sales return book deals with goods returned by the customers. Bills receivable book records the receipts of bills, that is, bills receivables. Bills payable book records the issue of bills, that is, bills payable. Cash book is used for recording only cash transactions, that is, receipt and payments of cash. And the last one is journal proper. Journal proper is the journal which records the entries which cannot be entered in any of the above listed subsidiary books. Let's discuss something about trade discount and cash discount. First of all, what is trade discount? It is a reduction granted by a manufacturer or supplier to the retailer to earn some more profit. It is allowed on the purchase of goods. It is shown by the way of deduction in invoice itself. Now, let's come to the cash discount. It is a reduction granted by a wholesaler to the buyer to encourage prompt payment within a stipulated period. It is allowed when payment is made within the specified time period. It is not shown in the invoice. Next type of subsidiary book is purchase book. All the credit purchases of goods or merchandise are recorded in this book. It is maintained for credit purchase transactions only. It is also known as purchase journal, bought day book, invoice book, purchase day book, or purchase register. This book does not record cash purchases of goods, cash purchase of assets, or credit purchase of assets. Now let's have a look at a format of purchase book. First one is date column. It represents the date on which the transaction took place. Next is particulars. This column includes the name of the seller and the particulars of goods purchased. Next one is inward invoice number column. It reveals the serial number of the inward invoice. LF column. This column shows the page number of the supplier's account in the ledger accounts. LF stands for ledger folio. Next one is details column. It reveals the amount of goods purchased and the amount of trade discount. Next is total column. This column represents the net price of the goods, that is, the amount which is payable to the creditors after adjusting discount and expenses, if any. And the last one is remarks column. It contains any extra information in case needed to be disclosed. Let's learn about the purchase book by taking an example. From the following transactions of RAM for July 2003, prepare the purchases book. July 5th. Purchased on credit from Kannan & Company 50 iron boxes at $500 each. 10 grinders at $3,000 each. 6th July, purchased for cash from Siva and Brothers 25 fans at $1250. July 10th, purchased from Balan and Sons on credit 20 grinders at $2500 each, 10 mixers at $3000 each. And on July 20th, they purchased on credit one computer from Kumar for $35,000. Now, let's move to the solution which is given on the screen. On July 5th, Kannan and Company purchased 50 iron boxes and 10 grinders at $500 and $3,000 respectively. So, in particulars column, we will write Kannan and Company, and under it, we will write 50 iron boxes at $500 each and 10 grinders at $3,000 each. So, in details column, we will write $25,000 and $30,000, and the total will be $55,000. Next one is July 6th. Now, we do not find this entry in purchases book because the transaction was done on cash basis. This book does not include any transaction which is based on cash. Next one is July 10th. Purchased 20 grinders at $2,500 each and 10 mixers at $3,000 each from Balan and Company. So in this case, we will write Balan and Company, and under it we will write 20 grinders at $2,500 and 10 mixers at $3,000. So in details we will write $50,000 and $30,000, and the total will be $80,000. And moving on to the transaction held on 20th July, it will not be recorded. The reason behind it is an asset, and assets are never recorded whether it is on cash or credit basis. So at the end we will find the total is 55,000 plus 80,000, that comes to be $1,35,000. Now let's discuss the advantages of purchase book. It is convenient to know about the credit purchase of goods at any time. It provides compact information about various parties from whom the goods were purchased on credit. Details column provide the analytical pictures of various items purchased. It provides detailed information about the quantity, rate, type of product, trade discount, VAT, packing and forwarding expenses, etc. Next subsidiary book which we are going to discuss is sales book. Sales book is maintained for credit sale transactions only. All the credit sales of goods or merchandise are recorded in this book. It is also known as sales journal, sales day book, or sales register. This book does not record cash sales of goods, cash sales of asset, and credit sales of asset. To know more about the sales book, let's discuss its format. And what are the different possible columns in the sales book? The first column is date column. It represents the date on which the transaction took place. Particulars column includes the name of the buyer and the particulars of goods sold. Outward invoice number column reveals the serial number of the outward invoice. Ledger folio column. This column shows the page number of the customer's account in the ledger accounts. Details column, it reveals the amount of goods sold and the amount of trade discount. Total column. This column represents the net price of the goods, that is, the amount which is receivable from the debtors after adjusting discount and expenses if any. And the last one is remarks column, which contains any extra information in case to be disclosed. Let's understand more about sales book by taking an example. From the transactions given below, prepare the sales book of Ram for July 2003. July 5th. Sold on credit to SS Traders 10 chairs at $250 each and 10 tables at $850 each at a discount of 10%. July 8th. Sold to Raja for cash 15 chairs at $250 each. July 20th. Sold to Mohan and Company an Almira at $2,200 and 10 tables at $850 each. July 23rd. Sold on credit to Narayanan one old computer for $5,000. July 28th. sold to Kumaran for cash 15 chairs at $250 each. In this case, the transactions which took place on July 8th, 23rd, and 28th will not be recorded in sales book because the transactions were on cash basis and there was a sale of an asset on those dates. Now let's have a look on the solution. On July 5th, sold 10 chairs and 10 tables at $250 and $850 respectively to SS traders at 10% discount. So we will write $2,500 and $8,500 in details, that becomes $11,000, and we will subtract 10% discount, that is $1,100 from it. So the total becomes $9,900. Next one is the transaction which took place on 20th of July, that is sold 5 almiras at $2,200 each and 10 tables at $850 each at to Mohan and Company. The price of 5 almiras is 2200 into 5, that is $11,000, and 10 tables is $8,500. So the total becomes $19,500. At the end, we will find the grand total is $9,900 plus $19,500, which is equal to $29,400. Now, what are the advantages of sales book? It gives the information about the sales for a period. It provides compact information about various parties to whom goods were sold on credit. Details column provide the analytical pictures of various items sold. It keeps the sales account brief and tidy. Thank you.